All right, so everybody ready? All right, here we go. This is Travis Witherspoon. We are live. I hope everybody's doing very well on this Monday morning. It is 9:21. I have 7:12 a.m. I do apologize for being late. Want to make sure that I end up getting everything situated and set up for you. If you read the title, you end up seeing that, quite frankly, I am up 1,100 pips this morning as we speak at this particular point in time. Hopefully, you end up catching up to some of the stuff that we end up doing on TradingView, some of the trade setups that we end up talking about earlier. Earlier last week and everything else like that, but I'm ready to hop into the disclaimer. Let's go ahead and get everything started. So I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. I understand that Forex involves risk. That involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you end up making money today. So with that being said, you're ready to show myself onto the screen. For everybody that is watching on YouTube and on Facebook, I do appreciate you taking the time to be able to sit with me and be able to go from there. I actually have not placed in the stream when it comes down to Instagram as of yet. I actually need to do that because it would be nice to be able to get my people from Instagram to be able to start going in, being able to take a look at that. If you are live with me right now, I do wish and I do ask you to do one thing for me. If you would, please make sure that you go ahead and drop a like and share this video right now as we're going through. I'm going to give you about a minute to be able to do that. That'll give me a chance to be able to get situated and set up for you. Now, I'm doing this for a couple of reasons. One, I would love for more people to be engaged with me when it comes down to overall trading, but I would like to be engaged with you. And the only way that I can be able to know who ended up watching this video is by placing a like in. So if you would, go ahead and smash that like button right now. Go ahead and place that in. Also, if you're watching this on Facebook, if you would, please go to Trade with Travis on YouTube and be able to subscribe to that, because I also end up doing this in the afternoons and love to be able to get your mentors or help when it comes down to that. So that's the first thing. I do appreciate if everyone would end up doing that. Second thing, let me go ahead and get everyone situated when it comes down to Instagram real quick. And then from there, we're going to go ahead and get started and being able to look at trading pairs and having an opportunity to be able to go from there. While I'm at it, what you think about the merch? What you think about everything else like that? Obviously, we end up talking about our logos and all that stuff, being able to put that together. But now finally end up doing that. So I am very happy when it comes down to that. Give me 1 second. And like I said, we'll get started in a minute. Please make sure you place in those likes. And we'll end up going from there right now. I have to get myself a tripod stand, and it's kind of funny. I definitely got to get one of those so I can be able to start going from there and getting that situated. But here we are. We are live on Instagram now as well. So for the people that typically watch on Instagram, there you go. Hopefully everybody's doing very well. So got Facebook, got YouTube right here, got Facebook right here, got Instagram right there. We got our trading charts and everything else situated and ready to go. We're starting off in a green day this morning, which is always good. And currently right now, what we're doing is just looking for overall trading opportunities and be able to go from there. So like always, let's start off with the economic calendar, kind of get an idea about what's happening with that. And then after that, we can go ahead and move forward, be able to take a look at some overall plans from there. So I'm switching over my screen. Here we go. On the economic calendar, what we see is this morning, we have inflation hearings when it comes down to the pound, and we end up having Chair Powell that's going to end up speaking a little bit later on today. Remember, this last week was a week in transition. What do I mean by that? It meant that when we're looking at how the market was basically moving, we could see that the U.S. dollar end up breaking out of a long-term trend line, a long-term down move. And from there, remember, when you end up having a breakout, you always have a retest. So you have to have the market basically turn around and retest from there to be able to get yourself into the best position to start looking at buying. So once it broke out, nobody was really looking at buying. They were waiting for the market to be able to retest during that particular position. So last week was all selling against the US dollar and being able to find out accumulation mode and being able to get into the best pairs at that particular point in time. Remember, the only setups that we end up having with the US CAD and US SWIFT you're interested in being able to see that, then obviously you. But we should be back. Just waiting on the connection to be able to see if we're back on. I'm gonna reload my pages. Back on. Okay, so and okay, so going back to what I was saying, if we look at going into this week, today is not going to be much news. So today is a trader's day. That means that you're looking at the charts, whatever the charts is basically telling you is probably going to end up ruling the day. Going into tomorrow, we're going to end up seeing Governor Bailey end up speaking. Governor Bailey ended up speaking for the pounds, and then after that, a little bit later on, you're going to end up seeing retail sales in the New Zealand dollar interest rate decision. The interest rates for mainly all of the pairs have not switched or have not changed, so I don't expect anything to change from there. That just means that right now is what's happening through this overall transition phase. So if we look at the currency strip chart, and to kind of help you out when it comes down to this, what you're looking at is this. Each color is representing a different currency when it comes down to this. And then after that, you have the time frame to go from there. So this treat it as this. If you're looking at the market and you're trying to figure out which pairs are doing very strong and which pairs are doing very weak, all you have to do is just look at which pairs are above the line and which pairs are basically below the line. And then from there, you can kind of get a better idea about what's happening with the chart and saying, okay, which pair is the strongest and which pair is the weakest. And obviously, if you want to be able to do that, if you do that, then that means that you can have a trading pair that you'll end up trading against and having some overall opportunity from there. So obviously, you're looking at the pairs. The Japanese yen is the strongest pair right now. The US dollar is the second strongest pair right now. You go through and you look at the weakest pairs. The New Zealand dollar is very weak at this particular point. You can see that pound. We can see that the pound is weak. We can see that Swiss franc is weak, and we can see that the Canadian dollar is weak at this particular point in time. So what does that mean? We're looking at pairs when it comes down to US base. So we can see that the US base pairs are strong against all of the pairs right now, aside from being able to look at the Japanese yen. That's very important when it comes down to our overall analysis and being able to look at the US dollar index as an example of what's going on with the pairs. So if we go through and we take a look at that, we can see based off of that currency strength that we finally end up breaking out of this triangle. Market end up basically bouncing right around 11,969. We can see that we end up having a lot of support right there at this particular portion before. The market is still not in the buy zone, but it has proven that it's ready to be able to make its move. Now, if this market ends up closing above this overall trend line today, then that means that the market is going to end up being fully bullish. And now you should expect that the market will end up going to 12,064 as its first move to be able to hit the 382. And then after that, going up to the daily D extension at 12,174. Now, because the US dollar has been so down at this particular point, I do expect that this is probably going to end up being a very much explosive move towards the overall upside compared to moves that we've seen previously. I think that we will probably end up getting a very big push as long as the US dollar remains to be strong throughout the day. So once again, the pairs that we ended up talking about getting into last week, we had to get, we were looking at being able to get into them before they actually end up breaking this trend line. Now, since they have, remember, you have a breakout, you have to look for a small little retest. Then after that, you should see a move toward the upside. So US dollar at this particular point is bullish. I'll be a little bit, I'll be very cautious to not try to overplay it, but I am looking at more bullish action. So from there, let's take a look at oil. We see what's happening with oil. We see that this market ended up going through a ascending triangle. Then after that, it ended up breaking down bearish. From there, we had all last week of where the market was basically getting into that little setup and transition period. Went up to the 618 or sweet spot area, and currently the market has broken the trend line. Now, at this particular point, that means that the Canadian dollar is basically getting to be very weak when it comes down to this overall move. Or looking at oil, oil is starting to get a little bit weak. So that means that the Canadian dollar is probably going to start to get a little bit weaker. Now, once again, we look at this pair and we look at the overall trading throughout the day. If the market remains to be below this overall trend line, we have a decisive move to the downside. That means that we should see that oil is going to end up being weaker, and we should see that the Canadian dollar is going to end up being weaker. So that means that US dollar is getting stronger. That means that the Canadian dollar is getting weaker. So trading a pair like the US Canadian dollar would be a very good pair to be able to get into and be able to trade for the long term, because you have that state of transition down the overall movement. Now, let's take a look at gold. Remember, when we were talking about gold, we compare that to the Japanese yen and being able to take a look at that for the overall pair. We go back and take a look at this from the weekly. We can be able to see that this market is in a state of transition, but it's basically in the buy zone. So that means that it's expected that the market should be going up at this particular point. But currently, right now, we see that this market is basically in a triangle. And typically, when you're in a triangle, you end up seeing consolidation. There's really no trades at this particular point to be able to get into until you have a breakout and a retest from an overall move. Now, if we take a look at that based off of the news that we have, and then after that go to the daily and be able to get a better idea about what's happening with the move, we can see that the market end up hitting a low price at this C right here. Have your smart field that's going to end up being from here to here, and there's a D extension at 2001.09. Now, I'm interested in being able to buy, but I'm interested in being able to buy at low prices if it remains to be the same. But if the US dollar is going to start getting strength overall between all of the pairs, then you should see that this market should break it toward the downside and be able to go from there, which means that you are looking at being able to trade this. You will have to be able to look at this from a downfield perspective and be able to trade down to the 382 or somewhere like that to be able to get you a safe trade toward the downside. So at this particular point, when I'm looking at gold, I'm not particularly looking at being able to trade gold from an overall pair and be able to go from there. My people that look at natural gas, we end up talking about overall move toward the downside a little bit earlier. If you're interested in being able to learn a little bit more information, all you have to do is go to TradingView at Carter Cow Capital and be able to watch that. I have a weekly plan that's being given out because this is more of a US based situation. Then after that, we can be able to go from there. Do you have a YouTube channel as well, Chris? Yes, I do. All you have to do is go to, I'm going to send you a comment. Yes, it's called Trade with Travis. It's brand new. So if you would go ahead and support, make sure that you end up, subscribing to that. Obviously, we're going to end up having different videos, but that's mainly a live streaming channel as well. And also, we end up talking about trading pairs and trading opportunities, kind of like the two trading pairs that we're looking at right now at this particular. So thank you for your question. Now, let's take a look at the three pairs that we're in right now. We're going to take a look at open pairs. I want to start off with the Australian dollar, United States dollar. The reason why I want to start off with this one is because you go through and take a look at our 5-star setup, our proprietary situation equipment. We end up seeing that the weekly is down in a position. We can see that the daily is down right now, and we can also see, let me move this up so you can be able to see it. We can see that the weekly is down. We can see that the daily is down, which means that we have trade and alignment, which is very good for us when it comes down to being able to trade this. Let me get back. There we go. And we had a very low risk when it came down to this overall trade. Because of where we ended up spotting it out, it was a 30 pip risk to a 630 pip reward. Now, for me, that's a 390 pip risk to almost a 8,000 pip reward when it comes down to trading. When I put this out before, I was talking about $6,300 for its overall trading in this opportunity. Let's talk about what that actually means and be able to go from there. So, you look at the weekly. If you look at the weekly, we can see that this market since March, when the coronavirus and everything else end up starting, you can see that this market actually ended up pushing up towards the upside. And then after that, breaking a long-term trend line right around the 7,400 area. Now, what's significant about that is that the market ended up going into the weekly 618 and started to retrace. So from a downfield perspective, this market is very healthy and start extension and the daily the extension towards the downside on the Australian dollar, United States dollar. So that means that if you want to be if you don't want to be patient, you can just go after daily moves. If you decide to be patient, you can be able to go after weekly moves. And this is where that huge swing comes down to, because we have two different areas that we're looking at being able to get out at. The first area will be at 68.85, which is take profit one. This is a point of control based off of volume profile and being able to take a look at that. If you're interested in being able to learn a little bit more, hop inside of our boot camp class that we're going to end up having September 28th to October 2nd. I will give you a little bit more information at the end of this video. And also, if you want to take a look at the daily R5 area, then that means that this area will be at 66.50. So we have a strong, if this market, the US dollar starts to push from where we at, we have 394 pips from that position. And then after that, you have 620 pips or 630 pips from that down position of where we're at right now in particular. So There we are when it comes down to the weekly. So the weekly is down. We take a look at the daily. We end up having that breakout move last week. Well, I'm sorry, 2 weeks ago. Then after that, all last week, we end up having a push up. From there, we end up seeing a counter trend line break on Friday. And from that counter trend line break, earlier this morning, the market ended up retesting this overall move and then started to push down. I would deem this market to be in the sell zone, which is a very good thing right now because it's at 85%. I mean, obviously, we would like to be able to see it get all the way up to that 90% area, but 80% or above is very high when it comes down, move to the downside. So if we're looking at this overall move in the daily, the market is expected to go from my youngest just woke up. Give me. See. If we go and take a look at this overall move and go to this swing, we can say that this market has retraced all the way up to the 618, which is at 72.85, and the D extension from that move is at 70.55 essentially. So with the market moving from 70.55 at this particular point, we can see that this market will end up going down at least from a daily perspective, at least another 208 pips towards the downside. Now, I don't necessarily look at the daily for being able to make in my entries. I look at the 2 hour for being able to place in my entries so I can be able to know, can I get in a little bit quicker than anything else. So from this 2 hour swing that we end up having that shows the breakout and shows the retest, this market ended up going all the way up to the 8.6 off of this position, which was at 73.17. And currently, if you're only trading this from a 2 hour position, if you end up getting this trade, if you was in my masterclass, the extension from there is at 72.36. So it gives you a little bit more options. If you want to be able to get out a little bit earlier, you can get out right around at 72.36, be able to catch this overall wave that we've gotten from